Hello, trading has closed on the 29th of August 2024. As always, we'll begin with our disclaimer, go over our calls and make some predictions, and we'll try as hard as we can to make some sense out of today's wild action. Well, this is my trading plan for Friday, which is August 30th. 2024. Please remember, I can be completely wrong. Any trades you make should be made at your own risk. Look for the pattern today with the early low, which is this. Tomorrow should have the early high. This is a reminder of what we said. We had mixed signals. Commonest thing is a gap and prompt move outside the day's range. Next most common is close little change and big move the next day. Well, we gapped and promptly moved outside yesterday's range. So we got the commonest thing. Next most common thing is the close little change and have a big move the next day. Well, we closed down 22 cents. That's closing little change. So, will we have a big move the next day? Well, since we already got the first thing, we don't have to get a big move, but almost always we will. It doesn't have to print, but that's what I would expect. And if it doesn't happen, we've already done the commonest thing. But so far, it's done the most common thing, and probably we'll just keep on following through. Now, when I made my video yesterday, futures were way down here. Well, let me go over today's action first. MEJT said this blip up here wouldn't stick, it would retrace. Now it says this drop isn't the real thing, gives us a target of 56.32.71. And if we don't gap down smartly, the rules call for it to print. Even though futures are up as I'm recording this, I'm not ruling out gapping down smartly. And also, MEJT almost always leaves a failed target at major changes in trend, and we have almost all we need for the major change in trend here. All we need is to maintain a trade under this low, which is very likely, but not guaranteed until it happens. Well, when I recorded this yesterday, futures were way down here, and I was looking for a gap and a prompt move outside the day's range. We had this trend line holding. Here was your break under this low. All we needed was to trade under this close. Well, we traded under the close today, but we traded over the high first. So now we have to maintain a break under this low. Not the close, the low. If you can maintain a break under this low here, I think you could still have a pretty sizable drop. We gapped up, hit a higher high, closed under all those highs, and even under the intervening low. And that's a very negative pattern, but time doesn't run out until tomorrow. I mean, if you gap up and take this out, all is forgiven. But for right now, it's a rejection of the rally. I still like this count. We just have to get confirmation by trading under this low. And if we do, I think we could drop hard and fast. So we had the gap, the higher high, close under the highs and the intervening lows. Now this is one of my pits. This isn't part of the MEJT system, and it's a pattern of mine called the diamond on stilts. This is an inverted diamond on stilts. Here's your stilt, here's your stilt. Half a diamond's all you need. And the first challenge, this is a support resistance area, is the origin of the left stilt. And here's the first challenge, and that almost always is going to hold. Now we have another diamond on stilts. Here's your stilt. Here's your stilt. Half a diamond's all you need, and it's very common to have these back to back. So we dropped right to the origin here of the left stilt, and that's support resistance. Now the first challenge of the origin of the left stilt usually holds. The next challenge usually breaks, and it breaks in grand style with a huge move down. Now the catch is, when the challenges occur so close together, this can all be considered one challenge. If this happened 2 or 3 days later, I'd be pretty confident that we were going to collapse here, absent gapping up smartly at the open. When it comes that close, it's just not as reliable. But we've tested it once, we've tested it again. I mean, you had this breakout, closing under all these highs, all these lows. The more times you test this support resistance, the more likely it is to break. Now, until it breaks, you can't be certain. I mean, futures are up. Doesn't tell us where we open. But if this is far enough away, and that's not totally clear, the second challenge usually breaks and breaks in grand style. And we almost always leave a failed target near the high if we're going to have a major change in trend. I mean, again, we've challenged the lows of this broadening top more times than we've challenged the highs. We can't even make it up to the highs. I mean, this is negative stuff. But you just need confirmation. And confirmation now is maintaining a trade under this low where futures have already traded. It's not a guarantee, but I think that's plausible, but we're not going to know for certain until the open. And to complicate matters, there's an economic report, PCE, which comes out before the open, an hour before the open, and that can lead to a big move. So big moves, I mean, we can open way up here and make me look all wet, but it won't cost me any money since I don't hold stuff overnight. But this is a perfect setup for a very big drop. All we need to do, ideally by gapping down, if we gap down under this low and don't reverse it, I think that's the end of the game for a while, even though I think we'll hit new highs later on. But of course, it hasn't happened yet. So we have the mixed signals rules again. Commonest thing is gap, prompt move outside the range. So otherwise you just stall for a day, and it happens when the market reopens Tuesday. We should take out this high or this low, and if we take out this low, it bombs away on the downside. Friday's pattern has a really high regardless of where we open. Typically it's a rally day with a high in the final hour. Failure is a straight line drop, and the pattern here isn't always as clear as you'd like it to be. Signals are mixed. There's a higher target. We don't gap down smartly. The rules call for it to print. We gapped up at a higher high but closed under intraday highs and under intraday lows. Not good. Wednesday's trendline break wasn't invalidated. Would have been ideal confirmation had we traded under Wednesday's close, but we didn't. And now since we've traded over Wednesday's high, confirmation is maintaining a print under Wednesday's low. You maintain a print under Wednesday's low, we could be pretty much lower before the end of next week. But you have to wait for the open. It hasn't happened yet. There's just a perfect setup, and whether it plays out, you can't tell till we see the open. Again, we open up here. Forget everything I said. It's the pattern with the early high. Usually a rally failure is a straight line drop. It's a perfect setup for the straight line drop, but it just It hasn't happened yet. It's just a perfect setup for it. And that's today's call.